Hello, everyone. My name is Akayla Gardner. I'm a reporter for Bloomberg News. I wanted to apologize for starting a little bit late. We're having some technical difficulties, but we're going to go ahead and start this event. So I have the pleasure of moderating this event today, hosted by The Emancipator. And for those of you who may not know, The Emancipator is a newly launched platform that reimagines the abolitionist newspapers of the 19th century. It's a partnership between the Boston Globe and the Boston University, and they're tackling some of the biggest issues surrounding racial justice and starting with an event on how to address the racial wealth gap. Today, we're tackling a question that I've asked many times in my reporting at Bloomberg. Can crypto be a driver for racial equality? And to answer that question, we assembled a group of expert panelists, starting with Rohan Grey, who is an assistant professor at Willamette University College of Law, where he studies the legal design and regulation of digital currency. He is also president of the Modern Money Network and vice chair of the Digital Currency Global Initiative. We also have Cleve Mesidor, who's running a little bit late, but she is the executive director of the Blockchain Foundation and founder of the National Policy Network of Women of Color in Blockchain. She also serves as a public policy advisor to the Blockchain Association and sits on the DC Innovation and Technology Inclusion Council. And last but not least is Dante Duarte, who is the Chief Strategy Officer and Head of Global Policy at Circle, a payments technology company and one of the issuers behind the stablecoin USDC. Thank you all for joining us today. I want to start with you, Dante. Really big picture here. What are the economic and financial issues facing Black and Brown communities, and how could crypto be a solution to that?
Well, thank you first to Kayla and to the Emancipator and others for the opportunity to share a virtual stage with you and with Cleve and Professor Rohan. I think, my starting point for why these innovations matter is that when you think about equity and financial inclusion, our traditional banking system has reached a point of diminishing returns. It is expensive to be poor. It is expensive to show up into a bank and look like me because the mere presence, your mere presence in the bank may land you in handcuffs, as we saw recently with the producer of Black Panther. And so the advent of always-on trusted forms of device-centric banking and payments on its own doesn't solve for financial exclusion challenges that have festered in our society over hundreds of years. However, it does lower the basic cost of being banked. It does lower the basic cost of participating in wealth-creating products. And we should also, of course, drive standards around ensuring people are not subjected to newer forms of financial risk by having internet funny money be a part of that package. But I think that's where this creates a really powerful art of the possible.
Cleve, I want to turn to you and kind of take a step back here. I still get this question all the time, and we got a question submitted about this, but how would you explain cryptocurrencies to somebody who doesn't know what it is, and why would somebody want to own cryptocurrencies?
Well, I have a simple explanation that I like to use. I tell people that blockchain is simply technology that securely verifies information, facilitates the exchange of value without third parties. Then I go back and I say, again, the technology securely verifies information. That's the ledger, facilitates the exchange of value. That's cryptocurrencies. Without third parties, that's decentralization. And then this correlation about blockchain versus cryptocurrency, just like light is beautiful and bright, what powers it is electricity. Just like, Bitcoin, Ethereum, and others are shiny and bright, what powers them is blockchain. But the second part of your question lends itself to that whole light issue, right? Imagine if all we did with electricity was light. That would be a waste. So imagine if all we did with blockchain was simply cryptocurrencies, right? So the opportunity for, to be able to leverage a new financial asset class or store value is wonderful. But I think the greater promise of blockchain is ownership, right? There's a lot of talk about privacy, and that's wonderful, but ownership is important for, especially for Black and Latino consumers that are big users of social media. But unfortunately, we are just users, right? Our data is being used by essentially 4 white males who control the internet to actually make profit. So the potential and the promise of blockchain is not just the opportunity to build wealth through cryptocurrencies. It's more of creating opportunities for ownership, being able to create products and services that can actually foster equity and inclusion.
You know, we're having this conversation during an interesting week for crypto. Many cryptocurrencies were under pressure. There was a bit of a downturn, but particularly the headline was Terra USD, which is an algorithmic stablecoin that fell to as low as 30 cents, down from its dollar peg. And Dante, I want to speak to you coming from Circle. How has USDC fared during this week? And do you think there is systemic concerns in the stablecoin ecosystem, and particularly with these so-called algorithmic stablecoins?
Well, it is undoubtedly not a slow news week, but it's also one of these weeks that I think in some respects is defining of the difference between instruments that are stable in name only and instruments that already enjoy clear regulatory standards. Here at Circle, we believe very deeply that if you say a stablecoin is backed by dollars and is dollar pegged, as a very, very basic recipe for success, it starts with dollars. And it starts with a regulation first approach. And so, you know, many stablecoin operators to their peril ignored the pre-existence of money transmission rules in the United States, which would be the equivalent in Europe and elsewhere of electronic money. A stablecoin in its best form, like USDC, is to have changed the form factor of a dollar, but not to have changed the confidence and fundamental trust of that dollar. And so, yes, it's a terrible moment. I wrote an article yesterday titled "The Importance of Being Stable," and there's a lot of consumers that were harmed in this event. But the challenge would be to assume that this event is then emblematic of the entire asset class, or emblematic of all of the stablecoins in circulation, in which today USDC has enjoyed a lot of growth. In the same way, in the macro environment, you see a flight to quality and a flight to trust. We've seen that exact dynamic occur today with USDC as well. Problematic, not emblematic, but nonetheless, I think there are existing rules and regulations that could have avoided the Terra debacle.
Definitely, and I also want to note USDC has held up pretty well, especially when
because it's about fundamentals. And so, you know, one point that really matters, I've been in every single global stablecoin conversation, most recently in the Senate Banking Committee, and in every conversation in between. And I think the standards that regulators are asking for are completely right. There has to be prudential standards. You have to have assets inside a regulated banking system. You have to be able to redeem demands for stablecoins when people want to cash in and cash out. All of these mechanics we have supported since the first USDC was issued until the last. And so, of course, we've held up exceedingly well in this environment. And in some ways, the crypto Armageddon that we're seeing take place in the market will be like the dot-com bubble. The companies that emerge from this round will be much more resilient than the companies that created the type of risk we see today. But it's also a really deep, important reminder to crypto innovators, don't over-innovate. If it looks too complicated to explain and it looks like a pyramid, it probably is one. And I think people can make those judgment calls for themselves as consumers. And I would also argue that the regulator shouldn't overregulate to create the very boundaries that kept people locked out of the systems in the first place.
Rohan, I want to bring you in here because I know you've worked on the Sable Act and a number of other bills associated with digital money. I want to know, are lawmakers thinking about vulnerable populations when they're thinking about regulation and potential legislation for the crypto industry? And how is that coming into play? How can we actually see that in the policy proposals that are put forward?
Yeah, I mean, it's certainly a big consideration, and there's a double-edged sword element, which is on one hand, a lot of these instruments are being disproportionately used by people of color, but on the other hand, the risks are also being disproportionately borne by people of color as a result. And you have a situation where given the failure of the existing banking system, I don't think anyone wants to defend the status quo on that front. The idea that anything looks better than what we have today becomes a very seductive way to bring in suboptimal alternatives. And so what you end up having is people looking at, for example, the rise of remittances and things and saying this must be positive for people of color because they're using it, without actually considering whether or not these risks are going to be borne disproportionately on those communities when the ecosystem eventually either does have a downturn or even worse, collapses in different ways. And we've seen this in other industries. Often innovative financial products that end up crashing do disproportionately target vulnerable communities who then suffer the worst when they go under. So it is a big concern, but that there is a lot of confusion or noise in the narrative about what the actual value is, what the actual benefit is with this option relative to possible alternatives, rather than simply relative to the status quo.
And if I can add to that, I do think this whole conversation about risk is important, right? But we do live in a society that tells, Black and Latino people that, oh, the stock market is a good way for you to build wealth. Extremely risky. Gambling is legal. And so we have a traditional financial system where, yes, Black and Latino people have borne the burden of risk. And that's why those of us in this space over the last decade have spent time educating our communities, focusing on ownership. And I think there's a concern that, the concern that Black and Latino innovators are leading adoption is that somehow we don't have agency and that we don't understand what we're doing. No, we understand finance very well because we've borne the brunt of the consequences, and now we're ready to actually find new options. So, this whole concept about, consumer protection, it sounds too much like patriarchy to me. We need to focus on empowerment. And quite frankly, that's what we're not focusing on, right? In the 90s, when we debated the internet, we didn't talk about accessibility. We didn't talk about digital literacy. We didn't talk about empowerment. And look where we are at today. And so, I'm one of those, Black women in this space who rejects this whole conversation and wants to talk about empowerment, not protectionism.
I want to follow up on something you said there, and I think it's a good point. Like there's always going to be risk associated with various types of investment. But in the crypto space specifically, how can people of color decipher between which cryptocurrencies or which projects to invest in when there's so many? There's thousands of coins, so many different projects popping up every day, and there's so much hype. How can they know where they can trust information and which one of these projects they should put their money in?
I'll start since I opened this conversation. I've been working in the space for about 6 years, and the last 3 years I've been working in collaboration with the Blockchain Association that has really empowered me to, do this piece on inclusion, bring Black and Latino innovators to Washington to meet with members of Congress. And we just launched the Blockchain Foundation, a 501c3 that will focus solely on education. And so in this role, the foundation will actually, we're working on putting together a digital assets library. The industry has created wonderful content that we just need to aggregate in a one-stop shop. So the plan is actually to create a digital assets library, partner with the American Library Association and figure out ways to make sure that folks have a one-stop shop for trusted information and that the industry can actually share that information. We absolutely have to do more on education. We have to educate policymakers at the federal and local level, but we also have to make sure people have access. And in terms of how do people actually make a decision, I actually always advise people to, stay within the top 10. But I think we have to realize that people have, especially people of color, we've had to create an alternative financial system that we've operated under. And to some degree, that's where the fintech sector came about. The fintech sector recognized that we were already operating in an alternative financial system and created products and services. So for people of color, the applications of blockchain, where you don't need a bank account, where you are actually able to hold your own keys, are attractive. But I let other folks chime in because I know I've dominated the conversation a bit.
Dante, I want to ask you, I feel like oftentimes crypto is talked about in two very different extremes, which is like, it's digital gold, it's being upheld and esteemed, or it's evil. I'm curious, is there somewhere in the middle there? Can two things be true? Can it be a tool for wealth creation, but also can it be very risky?
Yeah, it's a good question. So no more than the term black is a monolith. The term crypto is similarly not monolithic. And I hope we learned this week that the term stablecoin is not monolithic, and that not all of these instruments are created equal. There are thousands and thousands of digital assets in circulation available across the open internet. And so there is no question that a discerning, empowered end user, not one who's merely the beneficiary of the recipient of these innovations, but as Cleve so powerfully articulated, architects of what that future looks like. This is our very best shot as a planet on improving. The first of the UN Sustainable Development Goals calls for the eradication of extreme poverty. How, pray tell, will we do that? With 1.7 billion people with no bank account. Yet of that number, roughly a billion of them have access to a low-cost internet-connected mobile device. Crypto and blockchain, well-run, well-managed, well-regulated, with a deep, deep affinity for consumer protection, a deep affinity for digital financial literacy, is an incredibly powerful way of just lighting up a much more inclusive world in which your financial needs don't take bank holidays, but yet our banking system goes to sleep. All of the agencies that are guarding the world against digital assets and things like decentralized finance and software intermediated capital markets that could be incredibly empowering, those very agencies like the SEC do not have financial inclusion mandates. And so under the banner of consumer protection, we're functionally locking out entire cross sections of our society from capital market and wealth creating products that are always on, and that all you need to participate in them is a basic internet connected device, which all of us, if you're born in the right postal code, happen to have, and a little bit of digital financial literacy. Then you could take your own risks. One other final important question: the reason crypto has triggered such a polemic in society is it really your money if you have to pay someone to hold it for you and you have to ask someone to spend it? And so I think these are really, really powerful, deeply democratic ideas. And if they work well, they will move the needle on financial inclusion in incredibly powerful ways.
Rohan, we talked a lot about consumer protection, regulation. What do you think needs to be done to protect communities of color, whether that's in Congress or in regulators? What are you advocating for?
And I think the first thing is just some skepticism about this industry hype. I mean, we're not talking about an industry that is full of people of color at the top. We're talking about venture capitalists who are the same white men who've been funding the rest of these industries beforehand. We're talking about a for-profit industry at the intersection of Silicon Valley at Wall Street that aren't going to provide services that aren't profitable. They aren't a charity. They aren't a public good. The alternative here isn't the status quo of a banking system. It's public goods. It's the kinds of things that other racial equity advocates have been arguing for years. There's a reason why the people involved in saying crypto is amazing are usually people representing industry and entities like Circle, like Facebook's DM, that are going to eventually take the data that they generate here and use it in ways that the people involved in those systems don't want. And so I think it's very important not to start from the assumption that people who have a financial interest in these things are necessarily going to be caring about a broader interest beyond that, because that's not how markets work. And having black capitalism or wealth creation be the goal is itself a contested way of improving a lot of African-American communities or people of color in general. I came to this from developing context where the mobile money inclusion narrative was used to push very dangerous surveillance tools on people. And this myth that crypto is decentralized, I think, is not true. We have companies, we have developers, we have venture capitalists. And when it comes to sound regulation, when we proposed sound regulation, every one of those people were opposed to it until it became inevitable. And then they say, well, we're here for regulation, we're here for good things. But I remember when Circle opposed those things. I remember when the banking licenses that many of these so-called good stable coins were asking for now were the thing that they were opposing. And the reason that they're accepting it now is because the political winds have changed, not because they would have done it of their own volition. So I think it's really important not to take at the word of people who have a financial interest in something other than equity.
Well, if I can respond to that, because
and please tag me in as well.
yeah, so I have to say that when it comes to the $1.7 billion, 1.7 billion people who are unbanked, underbanked that Dante mentioned before, yeah, the industry is absolutely going after that. But in the US, I think that number is estimated between 65 to 70 million. Who's been tackling that? It has been Black innovators in crypto. And unfortunately, we are hidden figures, even though we lead that adoption. So for the last decade, myself and other people in the crypto industry who look like me have been doing the education, have been doing the work. And actually next week, we're actually going to be having a meeting with those leaders and Senator Cory Booker to talk about what we want for priorities. Unfortunately, I appreciate your comments, Rohan, but it concerns me that members look to you for policy recommendations for people of color, and that those are very people of color who are knocking on their doors to actually do this work. We did this. It was Black and Latino innovators in crypto who went to our communities and educated our community, not the industry. We're not being duped by industry. What we're doing is focusing on equity. We are not just holding cryptocurrency. We're building products and services in cryptocurrency. I can cite projects like Guapcoin, a Black woman creating a cryptocurrency for the Buy Black movement. I could point to in Oakland, where there's a team of people building a currency for cities, working with mayors and legislatures. So, we have agency. We can make these decisions ourselves. This is not the industry duping us. This is us in the US focusing on equity. I know Dante wants to get in here.
Well, no, I would just say, obviously, I clearly share Cleve's indignation at the mere intimation that people of color who look like me, I'm an officer of a soon-to-be public company that is regulated in all the states that have regulations for money transmission. And I think the commentary, it requires an indignant response. But I think Rohan raises important points, which is that you don't just change systems and inequities that are baked and hardwired into our country and into our society that have taken hundreds of years to hardwire and fester by merely getting regulated and licensed, right? Which we've done. You don't just change it by sitting through all the public hearings that matter. I was in the Senate hearing, a Black person who's the first one to get through high school or college who was born poor in the poorest part of the United States. And the financial inclusion question passed over my head and went to two white professors who were sitting next to me. So even in the highest chambers in our land, the Black person isn't seen. And so I am a slightly indignant receiver of Rohan's commentary, but where I will add a weight to his point is that we can't just observe these problems, we have to do something about it. My first act at Circle was to launch a program called Circle Impact. In that program, we have three basic promises. Number one, a share of USDC reserves will be allocated to community banks and minority depository institutions across the country to the tune of billions. What have you done on that same score? Number two, on financial literacy, we will partner with HBCUs across the country to make sure people are not just participants and observers, but builders, and they can do exactly what Cleve has described, agency. Number three, we will move the needle materially on humanitarian interventions around the world, as we have done with Venezuela. And I guarantee you, Professor Rohan, with due respect, by the time we are done measuring that scorecard, all of the rest of the world would have observed these challenges. We're doing something about it because people like me sit at the officers' table.
Is it okay if I respond? I think that the first thing is I very much appreciate your comment about agency, which is why I also take offense at the idea that I'm somehow a puppet master for designing legislation in consultation with offices of Congresswomen like Rashida Tlaib and Ayanna Pressley, who proposed the Stable Act that Circle opposed vociferously at the time, which was the regulatory approach that Circle has now come to adopt, which is that it is important to get a prudential banking license to participate in this industry. It is also why I worked with Congresswoman Ayanna Pressley to design the Public Banking Act, which was an attempt to provide financial inclusion without for-profit industry in the middle of that system, providing the kinds of services that the private for-profit banking industry has failed to provide for 100 years, but somehow we're supposed to assume that it's going to be different this time. So it isn't my decisions that those policies came out there. It's people who were elected to lead those communities, not elected to make profit for shareholders, but actually represent the interests of those communities. And when they heard the arguments made by the Blockchain Association, which is an industry representative association, Cleve, let's be honest, and when they heard the arguments from people like Jeremy Allaire at circle, which is a white guy leading your company backed by white guy venture capital. Dante, let's be honest, they were not persuaded that those were in the best interest of their communities or in the tradition of racial equity that they advocate for. So this isn't coming from me, this is coming from communities and a genuine vision of racial equity that is not grounded in capitalism. And I think it's important to acknowledge that what you're describing as doing things is the same thing that Facebook says when it builds an ecosystem that surveils people and takes their data and lies about it. It's the same thing that Tether says when they create a fraudulent backing system and get sued by the New York Department of State Financial Services and the Attorney General. So doing things is very easy when you're backed by venture capital and your interests are profit. It's harder to do things in the name of genuine equity.
But
I do want to jump in here.
It is coming from you, though. You are the sole architect of the Stable Act. Right? They're coming to you. And who in the industry, who are Black and Latino, are you working with? And
my colleague and co-author, Raul Carrillo, who worked at the Consumer Financial Protection Bureau, is the co-author of those with me. The fact that I took the public lead on that has nothing to do with the number of people involved.
But it does. And I think the industry, especially those of us Black and Latino, were really resistant to the Stable Act. And unfortunately, we can no longer move forward when solutions are being led by 2 or 3 people, and those in the industry are not participating.
Those in the industry were opposed. ACRE, other racial equity groups were endorsers of the bill. And again, it's easy to pretend that you're speaking for the entire African-American community. I would never claim that, but it is important to note that you are representing an industry association, and Dante's organization is headed by a white guy and backed by shareholders who are disproportionately not Black. So let's be very clear whose voices are.
I'm very honest. I represent Black and Latino leaders in crypto. Every event I've had has been that. So I'm happy to bring all of them. And even each year we bring a delegation of women of color from blockchain across the nation to Washington so they could speak, they can have voice. So that's what we want.
I do want to jump in here and don't want to interrupt this spirited discussion, but Dante, I want to ask you, there's crypto as an asset class, but there's also crypto as an industry, and Rohan brings up an important point. Are the people in leadership making up these workplaces? Is it a diverse workplace? And what more needs to be done in that area?
Yeah, I mean, I think these conversations matter, and frankly, I'm glad we're having them, right? And I don't. While I may disagree, we could disagree without being disagreeable with aspects of the conversation just now. I think the scorecard across finance, across tech is terribly pale, stale, and male. But it will not be improved without agency. It will not be improved without a Cleve advocating and shining a light. Frankly, it will also not be improved without Professor Grey and others participating in the public policy conversation. What I also have argued for is that you can't just observe these problems, you have to do something about it. And that's why, again, the Circle Impact program I highlighted was a realization actually in Chairwoman Waters' chambers, where I sat in, again, hearings since 2019, and really real questions were being asked in that hearing around the Libra project. Where are you putting your money, Mr. Marcus? Where are you putting your money, Mr. Zuckerberg? What are you actually doing with community banks, minority-owned depository institutions across the country? And I said to myself, if ever I'm asked again to sit in that seat, I never want to be asked again, why didn't you do the right thing? And so that's what that program was born from, right? The blend of the policy conversation we're having here, albeit slightly heated, can improve outcomes when people have agency and they're participants, not just on the receiving end. I don't believe that digital postal banking is going to solve deep systemic financial inclusion challenges, but nor will I draw a bright line on who in our society should be able to innovate, because the problems we face are enormous. And so I'm all in on the long run. And I do think we have to do a lot more, very broadly speaking, around diversity, equity, and inclusion at all levels of organization, at all levels of government. A real true academic who's driving these issues is Professor Brummer. His research on the void of diversity in the very regulators that are asking the banking and payments and technology systems to be more diverse themselves fail when they look at themselves in the mirror. So the people who are supposed to drive better outcomes, who are elected and who are otherwise driving industry and regulations, are themselves failing this scorecard. So there's a lot to do. These are deeply entrenched issues. There's a lot to do, but the technology often shows us where policy and incumbents have fallen short.
Cleve, I want to ask you about the issue of privacy. Can people of color be sure that their information is protected when they're working on certain projects or transacting on certain blockchains? And how can that be improved?
Well, privacy, yes. So privacy is one of the underpinnings of blockchain technology, right? But in the way that you're asking the question in terms of the privacy that Black and Latino people may want, we do have to start talking about cold storage, right? Holding your own keys and what that means, because technically, I think, Dante mentioned this, do you own your money if it's sitting on an exchange? Do you have that privacy if it's being, essentially to a centralized entity, right? Well, so privacy absolutely is possible. I do think that digital cash, which is how I determine cryptocurrencies, gives you the same applications, right? If I pay something with $1, right, I have privacy. That transaction is reconciled, finalized, right? There is no data mining after this. There is no following me, tracking me just because I stupidly paid for a banana with $1. So I do think that privacy is important, but it depends on what is your priority, right? I think for Black and Latino people who are gravitating toward cryptocurrency, whether it be for a new financial asset class or to build products and services, privacy is just one of those components. I think ownership is what we're looking for, and also the opportunity to have financial freedom and to actually have control over our money. I struggle sometimes with a bank just trying to get access to an account that is my money just because I forgot a password or I missed the step. So I think privacy is important, but it has to be backed by ownership as well. But I think there's a lot of issues around privacy that we have to fix with education, making sure that people understand how to make sure they have the privacy that they want, leveraging cryptocurrencies. No question, right? There's a huge learning curve, and absolutely, we have to make sure we're continuing to do education. I hope that's helpful.
Thank you. And Rohan, I want to ask as well, how do we hold these quote unquote centralized powers in the crypto space, within Web3? How do we hold them accountable to commitments of financial inclusion and equity?
Well, I think one of the things is that we have to look at history, because if we don't learn the lessons of history, we're going to repeat them. We've seen things like the Community Reinvestment Act not successfully achieve inclusion equity generation after generation, because when it conflicts with the motive of profit and generation of revenue, inclusion falls by the wayside. And when it comes to who's actually able to guarantee a universal access, the only entities historically to have been able to do that are entities that are not operating on a for-profit basis. So I think that's the starting point. When it comes to full inclusion, I think one of the biggest challenges here is trust. If you look at surveys of the banking industry, the reasons why people don't use banks, first of all, they don't have enough money, they don't want to get dinged with fees, but one of the most biggest issues is trust. Now, when it comes to privacy, privacy is going to be a huge issue for all sorts of vulnerable populations. But when you look at the actual technology underlying most of the crypto industry, it's a ledger. A ledger by definition is recording everything. It isn't private in the way that cash is, because when you make a transaction with cash, it doesn't keep a record anywhere. Now, if we want to design real digital cash, the challenge with doing that in the crypto world is you need to have a trusted issuer. It's easy to issue public money because there's a stamp with the president's signature or the treasury secretary's signature, and you can design a hardware device like physical money or a stored value card or something. You can't do that with a blockchain ledger, where by definition, the integrity of the system depends on everything being visible. So I think it's actually a structural problem at the heart of blockchain technology, that you're never going to get the kind of privacy necessary to engineer the trust for people to use it.
We did get a few questions submitted from the audience, and I want to read a couple of those now. Cleve, if you want to take this question, someone asked, is the wealth created from crypto creating more inequality? And if so, how can we reverse that?
well, is the wealth created from crypto creating more inequality? I don't understand how they're framing the question, but I don't believe the answer would be no, right? Because right now, those of us who are building wealth through crypto are just doing it based on how do we define wealth, right? I have to tell you, for most people, wealth is not making $1 million or getting rich quick. It's being able to pay your mortgage. You know, there are these two young Latinas in crypto. They call themselves the cyber code twins, Penelope and America Lopez, and they two millennials, early crypto folks, and they bought Bitcoin early. And their biggest success story for Bitcoin is they were able to use it to help their mother, save their mother from foreclosure. Right? That is what Bitcoin did for them. For me, you know, the Bitcoins I bought early, you know, I'm not a holder. I don't think we Black and Latino people can actually afford to be holders. It has afforded me to be able to do the work and the passion, focus on equity that I want. So I do think that, you know, we all measure wealth differently. We are all looking for different priorities, but I do think that for people of color in the US, the amount of inequity we face in so many aspects of our lives, those who have been able to make money, gain freedom, build products and services, create businesses, you know, create merchant accounts to access a new consumer base, it has been a positive.
And Dante, I want to ask this question for you. Someone asked, what are some interesting use cases for digital tokens that support Black economic empowerment?
Yeah, I mean, it's the first and most important piece, and I cannot stress this enough. And I'll tell you a personal story. I'm an entrepreneur. When I started my company in the insurance business called Risk Cooperative, I launched it having run one of the largest insurance companies in our industry beforehand. When I started my company and I went into the bank to get a basic business loan, the bank denied it on the grounds that I didn't have sufficient trading history and the company was too young. A year later, when that same bank realized that I was also the CEO of Tom Ridge's company, the first Secretary of Homeland Security, suddenly on a handshake, my credit changed and I can get a loan approved. I denied that loan, proceeded to launch the business without any outside money, and had to create my own credit. The most powerful way crypto can empower people of color who walk into a bloody bank and are redlined on the mere appearance is the fact that it's pseudonymous, is the fact that it protects your privacy, is the fact that it supports you in the lowest cost possible fractional way you can participate in a whole host of these assets. Now, that doesn't mean the industry should get a pass. It doesn't mean the industry should put out internet funny money and scams and frauds. But it's the single most powerful way to pull people into the perimeter of payments, the perimeter of finance at a device-centric level that isn't judging them based on their historical credit, their performance, their lack of money, or their appearance. That's real. And this is happening. 200 million people worldwide have taken the long bet that this asset class is here to stay. And that the idea that there's a third generation of the web in which we could read, write, and own digitally scarce content is an incredibly powerful equalizer. In the same way that the internet was an incredibly powerful equalizer on education and information sharing, connectivity, if brick and mortar banking doesn't transform, just like if fixed line telephony didn't transform, there'd be billions of people who have no connectivity at all. We're doing that for finance, and I think that's a powerful moment that will drive a lot more inclusion.
Rohan, we just got an interesting question on Zoom that I want to ask you. When it comes to creating a CBDC or an eCash, what does that mean for people who already don't have access to the internet or high-speed internet? How could that be helpful to them when they already are struggling with this problem?
Well, I think this is where we need to think of financial inclusion first and foremost as a systemic issue, which is to say it's not about a single technology, it's about a whole ecosystem. When we designed the ABC Act with Rashida Tlaib, it was about getting relief checks out to everybody. And we designed it to be prepaid cards that could be withdrawn into physical cash at every ATM. But we also realized you need to actually deal with the last mile issue. You need to actually put it in people's hands. You need to think about things like the Postal Service, which have provided universal access in every county in ways that no other industry has for 2 200 years. But you also need to look at the actual technologies that we're talking about. Blockchain technologies, by definition, are typically online to work, but a digital cash issued by the government can be on a card that can be offline. You can make payments through near field communication, Bluetooth, etc., because you don't need to reconcile with a distributed ledger at all, or even a centralized ledger. But also, this is why if we really want to preserve inclusion, we need to be fighting the fight for public cash, both physical and analog. That means things like laws that were passed with activists in Philadelphia, saying that stores must accept physical cash. That means articulating a real vision for cash, not just saying any digital financial technology is cash, but actually looking at what cash is. It's a token you can hold and transfer without any ledger, and to protect that both with physical cash and digital cash. And the only entity capable of doing that is the federal government, because it issues the dollars, it can back them up. What we're talking about here is a series of private instruments that may or may not be safe. And when it comes to pseudonymity, I'm a huge believer in privacy and anonymity as well as pseudonymity. But what we're seeing right now is entities like Circle are intermediated entities that are subject to AML KYC laws because they are subject to the same rules as the Bank Secrecy Act as every other kind of banking institution. Cash is different. Cash that you hold in your pocket is different. It's legally different, it's technologically different. And if we don't start there, we're going to find ourselves dealing with a surveillance system masquerading as a cash system.
And I'll say, I do think for all of these three questions coming from the audience, I think the most important things for the audience to understand is that the more options individuals have, the more inclusive money becomes. We should not be taking away options from people. We shouldn't be deciding which option is better because they can't make these decisions. Consumers need to have as many choices as possible so that they can choose what is going to empower their families and how they can actually have financial freedom.
Dante, I'm curious if you know of any initiatives that are out there right now that maybe Circle is exploring to address the digital divide.
Yeah, I mean, we have so many, it's hard to count. But we are really being deliberate about the agency questions that I think are native in the conversation that we're having right now. Is the idea that there shouldn't be a bright line on who can innovate in an economy and who can address these like deeply systemic issues. So I totally agree, with Professor Grey there. We are doing work, for example, with humanitarian agencies around the world. Circle put together a payment corridor, a corruption-resistant payment corridor, I might add, that supports more than 60,000 doctors in Venezuela at the height of the crisis in Venezuela. The public money narrative that we just heard a moment ago, we should remember that in many countries around the world, public money isn't worth the paper it is printed on because it's hyperinflationary and it's the sum of false promises. It was, as we saw on January 6th here in the United States, that fine line of democracy similarly is a public promise, right? And it's a fragile public promise. And so initiatives that drive faster, better, cheaper payments, but they require agency to solve for financial exclusion problems, are all we care about in terms of our humanitarian efforts, for example. We saw it take place in Ukraine. In the most acute example, a community of purpose organized on the internet, leveraging blockchain, leveraging cryptocurrencies, managed to raise within the first few weeks of that conflict more money than was officially passed through to the Ukrainian government by aid agencies, right? That model should be a part of that humanitarian digital inclusion blueprint, but it's not going to happen on its own. So Circle, through our Circle Impact efforts, we're working across agencies to catalyze exactly that operating model so that you could expand the humanitarian use cases around the world. The other quick thing I would say, cross-border payments. It has historically been very elusive. And frankly, I think Professor Gray's cynicism is right, that the crypto industry has been holding up a financial inclusion fig leaf and has failed to deliver results. Very recently, we announced through the Stellar blockchain and MoneyGram, the idea that people could use the MoneyGram network for cash in and cash out points, but better, faster, cheaper cross-border payments and transmission. That return is 7%, the stubborn average for sending a remittance around the world. We're returning that 7% cost of sending remittance to the end user, to the receiver and the beneficiary. This helps emerging and developing countries exponentially because remittances are a greater cash flow than foreign direct investment and official government development aid. I don't believe in paternalism. I believe in empowerment and agency. And the governments have observed these problems with absolutely very little action and very few results.
And to piggyback off of that, I'm Haitian American. So Haiti has been a priority for me in terms of this crypto conversation. And I've been collaborating with the Embassy of Haiti here in the US. And most people don't know, Haiti has actually started embarking on this conversation about a CBDC. They have an RFP out. They've actually looked at the numbers in terms of the unbanked and how to grow the fintech center. So these conversations within communities that we don't think will occur are already happening. When you look at Haiti, $3.8 billion comes from remittances, right? So they rely on that money. And as there's a generational shift, the average age in Haiti is about 21. We need to make sure that there are digital options so that as baby boomers and Gen Xers are no longer sending remittances through the expensive Western Union, that we have digital options so that people can really still support their companies. And that's why stablecoins and the work that Soko is doing is very important. But it's not just doing the work, right? Soko is partnering with a lot of various companies, traditional and decentralized companies, to make sure we're meeting the needs of people. Again, making sure they have options.
I think Dante is absolutely correct that we really need to be conscious of how fragile democracy is, because when it comes to accountability for corporations and it comes to transparency for things like fraud, I'm not a believer that more options are always better. If someone's selling 7 brands of snake oil in the medicine aisle, we shouldn't allow that to happen because it can hurt people. And the same is true with financial products. Time and time again, we've seen people say, let's just innovate, let's just try these things out. And then when it collapses, either people get hurt or the public has to step in. And if those governments fail, don't get me wrong, I'm very concerned about the stability of a lot of public money systems around the world. But if those systems fail, what also fails is the system of regulation and accountability for these private initiatives. It's what stops these things from becoming company towns, becoming the kinds of robber baron oligarchs that we have fought so hard in other generations to resist. And so when I look around at the development space, I see entities like the Gates Foundation, like the Omidyar Network, like the Better Than Cash Alliance, that are often led by the same fintechs promoting inclusion in the crypto space, who are not putting the interests of the people on the ground first. They're putting the interests of their companies first, the interest of building a tech system that allows them to gather data to subsequently monetize. So I think it's really important to center development and democracy, but that also cuts the other way when it comes to accountability for private initiative.
Cleve, I want to go back to remittances for a second. I also have family in Jamaica, and the cost of bank fees is huge. It's a huge problem. And people often bring up blockchain as a potential solution. But we hear also about the fees associated with maybe the Ethereum network. Will those fees eventually factor in if this becomes widely used for remittances?
Well, the good news is the reason we have stable coins, the reason that there are so many different types of cryptocurrencies is that there's not a one size fits all, right? Soko is leveraging stable coins, right? So we have to make sure that we are using the right cryptocurrencies. I would never recommend using Bitcoin or Ethereum for remittances, right? So we have to make sure that we are looking at options, stable coins that are pegged to a set asset like the US dollar, similar to Soko's USD, make a lot of sense. So, but even, there's a conversation about people wanting to get paid in cryptocurrency. There was just a survey that showed that 60% of the workforce responded, yes, they'd like to explore getting paid in cryptocurrency. Well, that might sound crazy to some, but every day I see commercials for Chime where people are depositing their paychecks to Chime, getting loans to Chime, right? And I had no idea. I'm sure Chime has a traditional bank that is backed by, but these non-traditional options already exist. So I do think we have to make sure we're using the correct cryptocurrencies for the functions. But I think stablecoins offer us an opportunity to make remittances faster, less expensive, and allow us to automate transactions.
And I was just going to say, Akayla, for the next time you're sending money to your family back in Jamaica, you don't send a cross-border email. You send an email to a trusted recipient and a trusted counterparty. Not if, but when we succeed in this industry, you will no longer send a cross-border payment. Instead, the real power, and this is why this is so important, the real power is in the idea that you could have peer-to-peer trusted relationships that transcend borders. And of course, this is not in the interest of many sovereign nations. It's not in the interest of existing financial crime compliance frameworks that would rather lock off entire continents for the fear that one Black or brown person makes one errant transactions. Entire continents are considered too risky to trade in. And so the bank process of de-risking is the reason it's expensive to send money to your family in Jamaica. It's the reason it's expensive for me to send money to my family wherever they may be. And that is an inequity hardwired into financial crime compliance frameworks since 9/11. Nothing has changed it except the advent of digital currencies, cross-border mobile money payments, and that's a challenger innovation. For every me in DC, there's a ratio of 12 to 1 for people who think status quo is just fine. That's why it's a hard fight.
I do think that we want to have a world where people do not have to be restricted by borders. But I think it's important to note that legal jurisdictions are border specific, right? The companies that are chartered here, the ones who are claiming that they're going to provide these products, are chartered in certain places and are legally accountable to those places and not others. And we do have an internet where you send an email across a border, because if you try to send an email to China right now, it can get blocked for that exact reason. When Russia gets sanctions, the world looks global when things are going well, and it looks national when they aren't. And to me, at least, the value that I very much agree with Dante on this is we need to be encouraging the kind of vision of cash or the kind of vision of financial inclusion that doesn't require sort of hard borders. But the way that we do that is through a public vision of things like cash and things like cross-border transactions. We have real-time payments in a number of countries right now around the world. The reason we don't have them in others is a failure of public goods provisioning. You know, we're in an era of private affluence and public squalor. And I think it's really important to draw the distinction between a real public good and an industry that is claiming to provide public goods when what their priority is profits.
I'll take two agreements with my friend Rohan Grey. That we have sowed seeds of peace here, I think, is a good thing for the emancipator. The one thing I would just add briefly to that is, if we are pitted in a fierce digital currency space race, and I think we are, and the stakes are enormous and complicated, and the idea that Web3 is either going to have Western values enshrined in it or anti-Western values enshrined in it, the space race was won when our leaders societally declared a vision and a destination. Right now, the United States, from a policy vantage point, has no vision or destination. And so the industry is leading where the policymakers have fallen short. But I completely agree that the provision of digital public goods has to be a leadership-driven issue and has to have voices at the table that are otherwise historically excluded, like Cleve's, like mine, like this conversation we're having today.
And I think to bring it back to this whole issue of equity, right? What is your relationship with money? That determines how you view cryptocurrencies, right? There are people that the traditional financial system has always worked for them. They've benefited from the financial system. So it's very hard for them to see why we should, deviate, why an alternative would make sense. And we have to recognize the biggest challenge to our monetary, system right now is financial inclusion. Too many people are not participating. And quite frankly, their option when they're sitting at home trying to find a solution is not to make it easier for me to get a bank account, which I think what a lot of policymakers think, that if they can just create a pathway for us to get into the traditional financial system, and that ship has sailed.
I think that's a good place to leave it. I want to thank all of these panelists for being so generous with your time today. I know myself and on behalf of the Emancipator, we really appreciate it. Thank you to everyone who tuned in. This live stream will be available on YouTube. And I look forward to hopefully having more conversations with you all in the future.
Thank you, Akayla.
Thank you.